to Everything Home. Today is, what is today? It is Thursday, March 13th. We are here with Chip Williams. I'm not going to tell you anything about him. I'll leave that to him. And I made no notes on him. So I don't even know who he is. So,
You
Chip?
don't know who I am?
No clue. So welcome, number one. And first...
Is it out of line to say that I'm your brother-in-law?
No, not at all. I had a note to bring it up. Full disclosure, he's my brother-in-law.
Yes.
And also, nope, I'm not even going to tell you what he does. So, Chip, welcome.
Thank you, Chris.
Who is Chip Williams?
Well, first off, like I said, I'm your brother-in-law.
Obviously, that should come first.
And for these purposes, I am in the mortgage business.
Mm-hmm.
I do residential mortgages for people such as yourself. I've been doing it since, I started in 1999. I got out after the market crash in 2008 and got back in about 7 years ago in 2018. Other than that, from a personal note, pretty laid back kind of guy. Like to play golf, like music, love live music.
Oh, you do? That's right.
Like to go to New Orleans and see music.
Yeah.
And that's kind of me in a nutshell, I guess.
Okay, this is me in a nutshell.
Yeah.
Since you brought it up, I was going to go to what is a mortgage broker first, but now I'm more interested in, you mentioned the crash. So we'll get to what a mortgage broker is in a minute. First, you started as a mortgage broker in 99. So that lets us all know that you're pretty far along in your years.
Yeah. More than I care to admit.
So you started as a mortgage broker in 99. So you were a mortgage broker almost 10 years before you got out of it, or right at 10 years.
Just about 10. Yeah, just about 10 years.
Okay. So the crash happened, and we're going to jump way down in my notes, but, and now it's 2025, right? And I'm curious, for you and buyers, like what's a major difference between in 2008 when you stopped doing it for a while and now?
Well, the biggest difference back then was the products that were available. I mean, we were given anybody basically with a pulse a mortgage loan. There were products. There's products called stated income products, and it got to the point. Typically, that was for a self-employed borrower, because a self-employed person typically writes off a lot on their taxes, so they don't show a lot of income, right?
Mm-hmm.
So they could state what their income was, and basically that's the number we would use as far as getting them qualified. That jumped into, it was typically for a self-employed buyer, but that jumped into being able to do that with a W-2 buyer as well, which made no sense. There are also things called pay option arms, where, trying to remember exactly how they work, but you had, I think, 4 different payment options. You could make a fully amortized payment. You could make an interest-only payment. Mm-hmm. Maybe there were only 3. I can't remember. And then you could make a minimum payment. Now, that minimum payment didn't even cover the principal payment. And mortgage brokers, I was on the wholesale side of the business at that point in time, meaning I was selling to mortgage brokers. And these brokers were pushing these pay option arms because there was also something called what was called yield spread premium. And you could basically, a mortgage broker could take a loan at a little bit higher interest rate. The bank would actually pay a rebate on that, and that would go directly into the loan officer's pocket. And some of these pay option arms, they were paying 4 points on the back. So, I mean, if let's just say a $100,000 loan, mm-hmm. in addition to your origination fee, you're making another $4,000 on top of it. So people were loan officers were putting people into these products that, just first off, they shouldn't have been available. And they were going to a lot of people saying, oh, we only have to make that payment. People that not necessarily financially responsible getting these mortgage products. And that's really what led to a lot of the housing crash.
Well, a few questions I have now, real quick. I'm just letting you know, I set it up a little incorrectly. I'm going to turn this mic a little bit so you may hear it. But a number of things come up here, and I think the first one I want to touch on, and I'm not messaging other people, I'm making notes to follow back up with Chip. This is very free form.
There you go. There's
Train.
your
I was
train.
hoping
There's
a
your
train
train.
would go by, and I don't actually know if you're going to be able to hear it or not. Not that you care. We're in historic Beaufort in Georgia, in a gorgeous building built in 1900 that was the Bona Allen building. I believe it was building number 1 or number 2. But it's right next to the train tracks. I love it. And I'm hoping every single recording we do here that a train goes by, because for
Chris
some
likes
reason,
trains.
I like trains. Maybe we'll put a video of the train just at the end of this for your own personal enjoyment. Who knows? So during that, all right, we're going to go in this order. So after asking who is Chip, my next question was going to be, what is a mortgage broker? Now, in what you just explained, I actually heard 3 to 4 different things. But first, what is a mortgage broker?
So let me clarify one thing. I am not a mortgage broker. A mortgage broker.
I will get better at research.
A mortgage broker works as an independent entity, and they work with a number of different banks, investors. So when they take your loan, they're shopping it around to different banks, different investors, wherever they can get the best price. But when a broker takes your loan, all they do is they originate that loan, meaning they take the application, then they pass that on to the bank or investor who processes it, underwrites it, and funds it. Okay.
So is it safe to say, for me to understand it, they're basically shopping for a buyer for that loan on behalf of...
You could look at it that way. You
Okay.
could look at it that way. Now, my company, we're a mortgage lender. Okay. So we work
Okay.
a little bit differently. I originate the loan. Now we still do work with a number of different investors that we can take these loans to, but typically they end up with a conventional loan would end up with Fannie Mae, Freddie Mac, or an FHA via government loans, that type of thing. But what we do, the difference between us and a mortgage broker is we take that loan application, we process it in house, we underwrite it in house, and we fund it in house. So we have complete control of that loan file from start to finish. Whereas a broker, they pass it along. They're kind of at the mercy of the investor or whatever bank they send that to. Most of the time, they do a pretty good job. And sometimes the rates could be a little bit better, but you do lose that control, which can and has been an issue.
When you say you lose that control, as far as you, like your company personally, or the broker, person looking to buy? Okay,
right, the broker. The broker loses control of that file once they send that to the investor because they're doing all the work on the back end.
I see.
Yeah.
Okay, and that's, if I understand, that's what's not happening when people come directly to you.
Correct.
Understood. Okay. And now we haven't mentioned it yet because that's not the point. But obviously this is a connection to Everything Home Magazine, which in Everything Home Magazine, Northpoint Mortgage does have an ad. He's representing Northpoint Mortgage. So we will, at the end of this, let you know how to get in touch with them. So what I've heard so far, and I'm learning along with you all, and hopefully you care about this too. I've heard mortgage broker, bank, loan officer, and mortgage lender so far.
Correct.
In all of this.
Right.
So I guess I would say the difference between those, are all of them necessary? Like, for our purposes, what are the differences? What do we need to know? Because there's so many things out there. I wouldn't know where to start.
I mean, they all serve a purpose. But let me just add one more thing. I mean,
Absolutely.
You can obviously go to your credit union or a bank for your mortgage. The drawback on that is the product offerings are limited. They could have, especially credit unions, they could have pretty good rates. But again, well, I mean, they're doing everything in-house. But when you work with somebody like me, I'm kind of like a realtor where I answer my phone 24/7. Doesn't matter if it's a weekend, after hours. If you go to a bank or a credit union, you're not going to get that level of service. A mortgage broker is typically going to work the same way. They're going to answer the phone when it rings. And you asked me another question with it. that completely escaped me that I was going to mention about a mortgage broker, but now I can't think about what it was.
Well, that's fine. I'm going to let us all sit here in silence, all uncomfortable, and blame it on you.
Okay, that's fine.
It
I'll take full
was
responsibility.
I heard multiple things: mortgage broker, bank, now credit union, loan officer, mortgage lender. There's all these different things, and I mean, you just mentioned the difference between a mortgage broker, if I understood it correctly, and what are you?
Mortgage lender.
Mortgage lender.
Yeah.
Thank you. You know, being that it originates with you, you know, you've got full control of it. And you may have explained it with what you just said. And then with a bank or credit union, it's the availability. You act more like a realtor and everything like that. So actually, I think you did cover that question.
Okay, good.
So now I'm curious. I'm going to share a brief part of my story and to see if it's relevant at all. Full disclosure, you know, my family, my wife and I, in 2012, I believe it was, filed for bankruptcy. Kept the vehicles, paid off everything else that we could over time, but like credit cards, medical bills, everything like that were cleared out. Gave it a long time, I think 10 years. And this was with a vehicle, not with a home.
Mm-hmm.
But I realized when I went to purchase a vehicle, that had cleared out. We had cash. You know, I had no debt at all. And I went
It's a
to
good feeling.
purchase. It was fantastic. I went to purchase a vehicle, and I couldn't get a loan for a vehicle, and it was because over the past few years, I had no debt. And so they came back and said, "Well, you need to get at least you need to get 2 credit cards."
So you didn't
and
have you had nothing on your credit profile then.
Correct.
Right.
And that was an issue. They were like, "Get 2 credit cards and come back in a year."
Yeah.
Like just put a little bit on them, pay them off, come back in a year.
Yeah.
And honestly, my response was, "Hold on. I'm debt free. I have proof of income, yet you need me to go get debt in order to come back." And you know, I was very, very confused by it. So first question is that relevant in home buying?
Absolutely, 100%.
Okay.
I'm actually working with somebody right now who has one trade line open, and we can't get an approval because he doesn't have enough trade lines open. But
I do not know the term trade line.
trade line is it's a credit card, your mortgage,
okay.
you know, whatever that shows up on your credit card, that's considered a trade line.
Credit report.
Your credit report.
Yeah. Okay.
But you can also do you can also work with alternative trade lines, meaning a utility bill, a cell phone. It's another good example. Car insurance. You can add those to your credit report, and typically FHA will accept those as a trade line if somebody has a very thin credit profile. So
interesting.
Yeah. So there's different, you know, not everything works the same, and you would think that getting a mortgage is probably just boom, boom, boom. But you know, it's very rare that you see similar situations. I mean, every file you look at is there's differences.
Okay. And if we're keeping up with new terms, Chris, oh, that's me. I don't think I introduced myself at the beginning. Hey, I'm Chris.
He's the guy that's doing the podcast.
I'm doing this. So that is now 5 new terms I've learned today, just so far. When someone comes to you, or a family couple, whoever it is, when they come to you, what are you first looking for? Or do I need to ask that differently?
Well, I mean, what am I looking for? I mean, I think what I want to do typically is I want to find out a little bit more about them. You know, what are their needs? What's their comfort level with the monthly payment? You know, how long are they going to be in the house? Do they plan on staying in the house? So you just really want to get a feel of, you know, is it a growing family? Are they downsizing? Are they moving up? Is it a first-time home buyer? It really kind of depends on the person and on which direction you take that. But ultimately, you want to know really what their hopes and dreams are for buying a house, and what their intentions are for that house, and how long they want to be in it.
Interesting.
Yeah.
Well, and it reminds me, because like you said, it's, you know, not that you're a realtor, you're not, but those are questions I would expect from a realtor, but not a mortgage lender. Yeah, that's interesting. So speaking of, you brought it up, first-time home buyers, move uppers, or whatever it is you said, people
moving up. People
Or
downsizing.
down for that matter. That's correct. So for a first-time home buyer coming to you, I actually have two different questions, and I don't want to forget the second one. My first one is, what can they know and prepare ahead of time to be better prepared to come to you? And second, I've already forgotten it, so go ahead.
That's all right. Um, Honestly, I think the sooner they can talk to a mortgage professional, the better, whether they're going to be buying,
Okay.
whether they're ready to buy now, or they think they're ready to buy now, or they're buying in 6 months. You really want to get a feel for where your financial picture is, where your credit is, what your credit scores are. Credit Karma and those things they're a great tool to monitor your credit. But typically, when I've seen us pull a credit report that people's credit scores are up, 50 points lower than what Credit Karma may be.
Mm-hmm.
Um, there are so many different scoring models out there as far as credit scores go. Credit Karma uses one. The three credit bureaus use a different one. Credit cards use a different one. Mortgage lenders use a different one. And typically, when a mortgage lender pulls your credit, that's going to be the strictest model out there, and you're going to see your scores
Interesting.
probably be lower than anywhere else.
Okay. Had
So,
no idea.
so my advice is, if you're thinking about buying a home, find out where, obviously know your finances. And my biggest advice is just to talk to somebody as early as possible, just to
Okay.
help you
So even
prepare.
if I have no clue, I'm completely unorganized. I really
Absolutely.
okay.
Yep,
That's a good point.
absolutely.
It's a really
Because
good
if you
point.
do have credit issues, if you have issues with your credit scores, or you have derogatory things on your credit report, that's something we can help you with also.
Okay. Interesting. With that being said, what are with people coming to you, what are the biggest issues you see that get in the way of actually getting that loan that people should know
Um,
about?
you
I know
know,
you said they're all
there's,
different.
yeah, they're all different, but student loans is a huge factor, especially now that they're all coming. People are starting to have to make payments on them now.
Mm-hmm.
Um, The other thing is having money for a down payment. People think of a down payment, but they don't think about closing costs. A lot of times your closing costs can be more than a down payment. So it's
Okay.
people are typically a little bit surprised when they see their total cash to close, meaning down payment plus closing costs. um, can't tell you how many veterans I have come to, because veterans that I talk to, because VA has a zero down loan program, that think they can just buy a house with no money.
Mm.
But when you're looking at eight, nine, $10,000 in closing costs and
Oh
prepaids,
my gosh.
um, it takes some money out of your pocket. Now, we do offer some down payment assistance programs. There's several out there, but you have to meet certain eligibility requirements
Mm-hmm.
depending on which one you go with.
Okay. Well, now I'm curious. You say down payment, which um if it matters and is close at all, I always heard 20%. Full disclosure, we purchased our house in 2010 or 2011, I believe. And I think we did 5. And then we had 20, but we used the other 15 to pay down credit cards to get the
Right.
credit score better, to get a better rate. Now, so there's the down payment cost. The closing cost, is that normally like pretty much the same amount, or is that closing cost going to also be a percentage of the total?
I mean, typically people say closing costs can be anywhere between 2 and 5% of the purchase price, which typically it'll fall within
Okay.
those lines. But it's going to depend on a number of factors. It's going to depend on the day of the month you close, and how much interest, how much prepaid interest that is going to take. It depends on what time of year you buy, when taxes are due. So all these things factor into how much you're paying in closing costs, especially your prepaids. I mean, your closing costs are typically this. There's two different types of closing costs. There's a closing costs and there's prepaids. Okay, closing costs are lender fees, title fees, and those are all typically the same.
Okay.
Your prepaids, again, is prepaid interest. So if I'm closing on the first of the month, because your mortgage payment, uh, you don't have a mortgage payment for, so if, let's say you close, was March. Let's say we close March 1st. You don't have a mortgage payment until May. Okay. Your first payment is due in May.
Okay.
So you're not paying anything for April.
Okay.
And you're not paying anything for March. So your May payment, May 1st payment, mortgages are paid in arrears, not like rent. Your May 1st payment would be for the month of May. Your May 1st payment on a mortgage is for the month of April.
Oh,
Okay.
okay.
So that whole month of March, you're not making a payment. So we need to collect that interest for the month of March at closing. Does that make sense?
And so, if I'm understanding you correctly, and I was going to come back to it, right? You said, well, it depends on the day of the month you close,
Yep.
and I assume that's where that comes into play.
Yep.
So does that mean if on March 1st there's more of March for me
So
to pay, but if I close on
you
like
owe
March
31 you
22nd,
owe 31 days of interest if you close on the 1st. If you close on the 31st, you owe 1 day of interest.
oh,
Yeah.
I had. That's why I don't do this. That's why I do things that have absolutely nothing to do with any of this. Okay, so that's part of the day of the month. Is there anything else? Um, Sorry, I got distracted because I was going to write something and then I had my eraser on, not the pen, and it erased that entire note. That's fascinating to me. That's the day of the month. Is there anything else that has anything to do with the day of the month that you close?
No.
That's a big one that
Uh-uh.
I had no idea about.
Yeah.
Okay.
Yeah.
You also mentioned the time of year, and
Ti-
you also mentioned taxes in there, but
Well, and maybe I should have just said it depends on when taxes are due. So obviously that translates to time of the year. So let's say taxes typically are due around here, usually like October 15th, sometimes November 15th.
okay.
Some counties are December. So it depends on. So if I'm buying a house today in March and the taxes for 2025 are already paid, I need to pay taxes between for March, April, May, June. Let's say they're due October 15th.
Mhm.
So I need to pay May, June, or March, April, May, June, July, August, September, October. So that's 8 months of taxes that I have to pay because the seller has already paid those taxes. So basically, the seller needs to be reimbursed for those taxes.
And that will also be part of closing costs.
That'll be part of closing costs.
What I'm learning is that I'm just gonna call Chip early on because I don't.
That's
No,
the
I had no idea, and I don't have a memory of knowing any of this. Honestly, somebody slapped the paper in front of me. We're like, "Oh, we pay that much."
typically you don't get into those details. I mean, you have some buyers that want to know everything. You have some buyers that are just give me a mortgage, let me buy a house. And then you don't always have to explain this to every buyer. Some people you do, but most of the time you don't.
Okay. It's just interesting to me that the later in the month. Yeah, that's very interesting. Um, so tell me about. I don't want to forget Northpoint Mortgage. So tell me about what you all do, the expectations of getting in touch with you, how far out, which you already said as soon as possible, what's too late. Like, just share with me what you all do.
Well, we do mortgages, Chris.
Yeah.
I mean, excuse me. The company that I work for was started by three partners about I think 12 or 13 years ago. All just fantastic, fantastic people, great guys. I know it sounds corny, but it is kind of like one big family.
Mm-hmm.
Everybody treats each other with respect. Nobody's jumping all over you. Nobody's making me come into the office. As long as we're all working, everybody's happy.
Yeah.
What was the original question?
Just I wanted to make sure we touch on Northpoint Mortgage and what they do.
Yeah.
Because
So,
you're representing them, and I want to give them a shout out a little bit.
at Northpoint, we're actually a branch of a larger entity, a nationwide company called Fairway Independent Mortgage. We're a branch just working under we're a branch of Fairway just working under the DBA Northpoint Mortgage.
Okay.
And everything, every document, every email, everything I send out is going to say Fairway and not Northpoint.
Mhm.
We're just branded as Northpoint.
Okay. So
And we're in Roswell, by the way. Roswell,
Oh,
Georgia.
that's a very legitimate
Actually,
point.
we're in Roswell. We have an office in Cumming. We have an office down south. I can't remember where that is. We have one in Athens. We also have one in Colorado and one in Florida.
Oh,
Yeah.
okay. I didn't know about all of
Yep.
that. Okay, very good. So before we end, and every podcast I do, no matter who it's been for, I've ended it like this, and I did not give you a heads up on purpose. I never let people know.
Okay.
Chip.
This is the trick question?
No
This is-
tricks.
no tricks?
None.
Okay.
But usually very surprising answers. Maybe yours will be boring. I have no idea. Favorite movie?
Oh, man. You know, I always go back to two.
I'm sorry.
Can you?
I'm going to rephrase the question.
no,
No, I'm
no,
not.
no.
It's going to be exact. Favorite movie?
Can I give you two?
Yeah, sure. Sure. Don't follow
Do you want to
directions.
guess?
It's fine.
Yeah, I mean, you know me
No,
pretty
I
well.
have
You
no,
don't want to guess?
I doubt I have any idea. But yes, absolutely.
I
sure.
would have to say Caddyshack and Shawshank Redemption.
I probably should have known. I did know those.
You probably
That's
did.
right, I
You
did.
probably did.
Yeah, both very good. Shawshank is good grief.
Yeah.
Yeah,
Good one.
fantastic.
It's a good one.
Second, is there a book you're reading right now?
I hate to admit it, but I'm not a big reader.
That's not an uncommon answer.
I know.
It's
I know.
really
So-
not.
you know, and I used to read too. Like when I was in college, I used to read all the
Well, you
time.
had to.
Well, no, I
You
mean,
were in
I,
college,
no,
you had to study.
no, I read books for pleasure, not school.
Ah,
Yeah.
I see,
So
but not anymore.
not really.
Okay,
Not really.
it's because you're old and you can't see.
Well, no, that's not why I don't read. But I am old, and my vision is getting worse and worse.
Mine is too. My glasses are over there. I purposefully didn't wear them during this. And last,
Yes, sir.
what do you want to do when you grow up?
I want to play golf on the PGA Tour.
Nice. That's a good one.
Yeah, or be a rock star.
Stick with the first one. You're pretty good at golf.
Yeah, I'm definitely not a rock star.
No, not at all. All right. Well, we hope.
I mean, you've seen me play drums. Come on,
I think you're a pretty good drummer.
I'm not that good.
I can't play drums at all.
Yeah, you can.
Yeah, we played music together. It's fantastic. It's fun. He's a good drummer.
Sometimes, if he ever has time for it, we do,
Yeah.
which isn't very often.
No, it's not at all because I'm doing stuff like this. We hope you've gotten something out of it. I know I have. Learned a lot of terms I didn't know. This is Everything Home Magazine, and as a reminder, we touch on things that are for home buyers, renovating your home, and owning rental property. So we appreciate your time, and we hope you have a good day.
Take
Thanks.
care.